deal with item number 6, which is matters relating to the banking sector in Ireland. And we have with us Mr. Harold Felsen, Mr. Nicholas Bergman, the Savings Bank Foundation International Corporation. We have Rural Link present with us. We'll hear statements from both, and Seamus May then is interested in public banking in Ireland, and we'll hear separately then from you, Mr. May. Before going to the opening statements, just want to draw witnesses' attention to the fact that by virtue of Section 17(2)(I) of the Defamation Act, witnesses are protected by absolute privilege in respect of their evidence to this committee. If you are directed by the committee to cease giving evidence in relation to a particular matter and you continue to do so, you are entitled thereafter only to a qualified privilege in respect of your evidence. You are directed that only evidence connected with the subject matter of these proceedings is to be given, and you are asked to respect the parliamentary practice to the effect that where possible you should not criticise nor make charges against any member or person outside the House in such a way as to make him, her or it identifiable. Members are reminded of long-standing parliamentary practice to the effect that members should not comment or criticise or make charges against a person outside the House or an official either by name or in such a way as to make him or her identifiable. And I want to invite Mr. Nicholas Bergman to make the opening statement, please.
Maybe.
Oh, sorry, the other way around.
Yeah,
Please, Mr. Boland then.
Yeah.
Right, Seamus. Ireland first. Good.
Okay, first of all, Chairman, thank you and your members of your committee for inviting us to speak here. Irish Rural Link, we're an organisation, a voluntary organisation representing rural community development groups all over the country. And our main motto is sustainable rural communities, and we do work particularly with communities and people who are particularly disadvantaged in terms of their situation living in rural Ireland. And over the last number of years, we have been particularly struck by the reality that a large section of employment in rural areas is provided by the SME sector. In fact, in the slide we have 99.8% active enterprises in rural areas, 68.9% of people engaged, and effectively this sector has taken the greatest hit in terms of the banking crisis. Mainly because they haven't been able to actually get the kind of loans necessary to keep them in business. Indeed, if we quote from John Trethowan of the CRO in his 17th report of the Credit Review Office, he states very clearly that, and I quote, as being of concern for SME and farm lending, the reality is the relationship between this sector and the banking is so poor at the moment that they're not even seeking loans. When we combine this with the fact that SMEs numbers have gone down 8% according to the Statistics Office in rural areas, we get the very clear picture that this sector is not enjoying the kind of recovery that we are led to believe is in existence, and that's mainly because of the banking situation. Irish Rural Link have combined with our colleagues from Sparkasse in Germany, who happen to be the largest effectively banking sector in this area in Europe. Theirs is a 200-year-old concept, and as Nicholas will explain later on, it actually was spared from the worst excesses of the banking crisis and therefore protected the SME sector. And we're particularly happy to bring this model of banking for consideration. Our contention, Chair, is that Ireland aspires to having a recovered and healthy economy, one that isn't subject to bumps and crashes on an ongoing basis. Part of that success has got to be a healthy banking system. And what we talk about is, if we look at the slide, 3 pillars of the German banking system. The private commercial banks, the credit cooperatives, which would be the equivalent of our credit unions, and the Sparkasse Public Savings Bank. That to us is a major plank needed for a proper economic banking system to exist. In Ireland, this is nothing new to us. We did have a sort of public banking system when we had the ACC and the ICC in place. So it's not as if we've not tried this before. But at the moment, we have the big gap between what's called the private commercial banks and the credit union. And in the middle, we have a sector which is simply not working. And can I say, we've been 3 years working on this. We have done a complete business plan, which has been submitted to the Department of Finance for consideration. We have looked at the concept of 8 regional banks based around Ireland, each of them independent of each other, each of them bringing the money back into the community, into the region, and in effect, each of them becoming an economic hub within that region. And as I said, this is nothing new. It's 200 years old in Germany, and we've tried it ourselves before in this country. We know that as far as we're concerned, the SME sector and the farming sector is the one sector that will create jobs and create the sustainable rural community that we're talking about. And in that context, we believe that the government, who have this in their own programme, must seriously work with the stakeholders in terms of making this happen. What has to happen now, we've also, by the way, did a lot of work on the legal possibilities of this, working with Trinity College, etc. But what we believe now, that government has to recognise firstly the need for a third pillar, which we had in the past, which exists in Europe. And we're asking that the government of the day consider seriously allowing this to happen. Otherwise, we are actually turning our backs on what has happened successfully in Europe, in Germany, and we're actually dismissing a banking system which has served the SME sector and the rural communities very well. And Chairman, if I may hand over to Nicholas to explain the concept in terms of how it works in Germany, etc. Thank you.
Okay, thank you very much. Chairman and members of the committee, thank you first of all for your invitation. As Managing Director of the German Sparkassenstiftung für internationale Kooperation, sorry for the very long name, I'm very happy together with Irish Rural Link and with my colleague Harold Felsen here to present the essential elements of a new possible Irish public banking model. But let me please emphasize, to make this very clear, that the German Sparkassen will not be opening branches here in Ireland, nor do we have any financial interest here. Our mission, the mission of the German Sparkassen Foundation, is to make our experience and expertise available to other countries. So when we built up Sparkassen in the former GDR back in 1990 and made them sustainable institutions after a very, very short period of time, we gained a lot of experience on how to set up new public banking models. We transferred this model to other countries in Europe, so I think we have a lot of experience to offer here. But let me look at the German Sparkassen model very briefly and then come to the idea or the suggestion that we developed together with IRL. German Sparkassen are a 200-year-old value-based banking model which links the real economy, society, and sustainable regional development. This is the objective of Sparkassen. We have 390 local Sparkassen today in Germany. So there is one local Sparkasse everywhere in the country. There are a total of 12,000 branches, 250,000 employees in Sparkassen. So Sparkassen are the largest banking group in Germany, probably in Europe, and we are the market leader in Germany. And Sparkassen are only working in Germany. This is in our Sparkassen laws in Germany, where it's clearly stated that we are local banks. So we have a local or a public legal form, we have municipal trusteeship, we have a public mandate, which means that we not only have to earn our money, but we have to give back something to the society, including the profits that we earn. And we're working on a regional principle, which means that each of the 390 Sparkassen in Germany has its own clearly defined business area where they are working, which is extremely helpful for regional economic development, so that not all business activities move to the capital, but that something is really happening economically in the region, in each region in the country. So 200 years ago, when Sparkassen were founded, there was a philanthropic aim of fighting poverty. That was the starting point. But this very quickly developed to include support for local tradesmen, for local businesses, including mortgages, by the way, as well. Sparkassen are nowadays financial institutions under public law, but they also fall under the general banking legislation. So all rules and laws that apply to the commercial banks also apply to us. We think this is extremely helpful because it makes us very professional. And it is also, by the way, stabilizing the financial system in the country. So that is Sparkassen in Germany. What does a similar model in Ireland look like? So for Ireland, we have, together with IIL, developed a new public banking model that should add to the existing players in the market. So we do not want to crowd out anybody, but we think there is a gap in the market, like Seamus said before. The Irish model that we developed includes 8 independent regional public banks and the outsourced back office functions, outsourced to a central service provider, which again is being owned then by the 8 new public banks. The business model that we developed, and we looked especially at one flagship bank, one pilot bank in the Midlands region. Why Midlands regions? Because we think that if a public bank works in the Midlands, it will work everywhere in the country. Starting with a pilot in Cork, for example, would not make much sense. So we developed the business plan for Midlands, and according to this business plan, there will be break-even after 2 or 3 years already. So I think there's a lot of business opportunity for such a public bank in the Midlands. The public bank would offer the full range of financial services for all people living in the region, including especially small and medium enterprises. You, Seamus, already talked about the gap that is to be filled. We know that there is a sector in the economy which is not being served by the credit unions because they don't have the capacity. Also, they have legal limitations. And obviously, the pillar banks are not interested in certain parts of the economy neither. So there is a gap where public banks could be extremely useful in order to strengthen the local economy everywhere in Ireland. Apart from any technical discussions, it is most important that a political consensus is being built about the necessity to set up public banks here in the country. It is, at the end of the day, a political decision because it affects the stability of the entire financial system. It would increase, in fact, the stability of the financial sector in the country. What we can offer is a concept, a proven concept, a sustainable concept, but it has to be adjusted to meet the requirements of the Irish market, be it legal requirements, be it market conditions, but also the culture in the country. So it will be an Irish concept that has to be developed. This can be based on the German experience. And what we would like to offer is that decision makers here, stakeholders here from Ireland can come to Germany and look at the German model, not only at the Sparkassen. That Sparkassen people like their own model is obvious. But also we can arrange the meetings with the regional governments, with the supervisors, with the departments, ministries, local business people, whatsoever, so that you can have a look from different perspectives at what Sparkasse really is. So for now, I think that should be it. Thank you very much.
Thank you, Sir Bergman. Before I go to Senator Conway Welch, I just want to clear the relationship between Rural Link and the bank. So it's Rural Link has made the application, is it, to the central bank?
The relationship is very simple. We're the National Voluntary Organisation. We've been calling for this for a while. Sparkas are effectively working with us as a consultant because we figured they were the best model to look at. So, but Irish Rural Link have made the positions to Department of Finance. We're really working through the Department of Finance, also the Department of Rural and Gaeltachta. It's a new name now at this stage, but those are the two main departments that have been working through. Yes, we've had talks with the central bank, but also with a range of other organisations in the field, whether it's the various the farming organisations, builders, etc. So we've been talking across political parties, across the organisations.
So Sparks and then are just advising
Yes.
you in relation to this.
Absolutely, yes.
There's no application directly to the central bank. Or have you had meetings with the central bank?
Yes, these would be meetings that we've had to have in order to build our case. But the first hurdle that we have to cross here is really in the Department of Finance. So we have to start there. They will work with the central bank as well. That's what we want.
Okay. Mr. May, then, separate to the bank and Rural Link, you have an interest in the concept of public banking as well. Would you like to give a short statement before we continue?
Well, my name is Seamus May. I'm founder and chair of the International Small Business Alliance, and I'm joint chair of the Public Banking Forum of Ireland. I have worked at the coalface of Irish business for 40-odd years, with particular emphasis on SMEs and in the area of competition law and enforcement. Over the past few years, I have carried out studies in various markets, from beer to beef to bread, cement, concrete, and together with my colleagues in PBFI, we have produced a proposal for Ireland's alternative banking force. And just by way of background, in the context of the current banking sector, I should say that our island economy has contributed in no small way to the creation of dominant and joint dominant firms across more sectors of the economy, not least banking, where we have effectively 2.5 pillar banks controlling 95% of the Irish banking market. Without adequate regulation, dominance almost always creates market power, and market power quickly morphs into abusive market power. This in turn leads to market distortion, elimination of competition, and long-term damage to the socio-economy. Now, our forefathers knew this, and that is why they crafted Article 45 of our Constitution. Now, Article 45 is merely a directive principle of the Constitution, but it is nevertheless the duty of the Oireachtas to enshrine these principles into law through legislation. And I think it's worth just having a quick look at Article 45 in the context of our current banking sector. It says that the ownership and control of material resources of the community may be so distributed amongst private individuals in the various classes as best to subserve the common good. Further, that especially the operation of free competition shall not be allowed so to develop as to result in the concentration of the ownership or control of essential services in a few individuals to the common detriment. And very importantly, it says that in what pertains to the control of credit, the constant and predominant aim shall be the welfare of the people as a whole. So clearly, we have a lot of work to do going forward, and we must examine our current pillar banking system and see what the alternatives are. Article 45 is a cornerstone of how we are supposed to be running our country, yet it continues to be ignored by the body politic at large. We also know that the behaviour of the banking sector led to the wholesale destruction of our country's socio-economic well-being. We allowed our privately owned banks to become too big to fail, and we granted them a monopoly over the creation of credit. Why? Worse still, we've shackled our credit unions and post offices so that they could not compete fairly, if at all, with the private pillar banks. In doing so, we have driven a coach and horses through competition law. In bailing out our banks, we knowingly and blatantly breached Irish and EU state aid law. The quid pro quo was to be the introduction of real and meaningful competition into the Irish banking market. This has not happened. We have lost Anglo-Irish Bank, INBS, Bank of Scotland, Ireland, ACC Bank and EBS. And over the past 8 years, it has become apparent that successive governments are trapped in a dichotomy between the growth and welfare of the pillar banks and that of the general welfare of citizens and the indigenous economy. With little meaning progress having been made on rebanking the economy over the last 8 years, the question of Ireland's compliance with EU competition law surely arises. It is difficult to reconcile the present banking policy and behaviour with the almost daily warnings over the future of credit unions and post offices. Hundreds of post offices are set to close and credit unions are being pressurised into merging. Put simply, promoting Ireland's existing private pillar bank model, which accounts for 95% of the Irish banking sector, is simply incompatible with driving the indigenous economy. With over 300 credit unions and 1,100 post offices, the platform is already in place to create a local and regionally based alternative to the present pillar bank model. There is pent-up demand throughout the indigenous economy for a sustainable funding model. As it stands, both the credit unions and post offices are severely restricted in terms of the products and services they can offer and to whom they can offer their services to. To date, successive governments have applied discriminatory terms and conditions to credit unions and post offices as compared to the pillar banks, which on the face of it appear to run counter to Irish and European competition law. What funding is finding its way down to the indigenous economy arrives through various circuitous routes, with profit extracted all along the money supply chain, and so it ends up prohibitively expensive to indigenous enterprise. ISIF, the Irish Strategic Investment Fund, and SBCI, the Strategic Banking Corporation of Ireland, are cumbersome creations and for the most part act as intermediaries with no local focus. Put simply, the Irish solution to funding SMEs puts Irish SMEs at a significant disadvantage to their German counterparts who obtain funds at first cost from their public and community banks. The Public Banking Forum of Ireland proposes an all-encompassing full banking service model that will, on the one hand, compete with the commercial pillar banks and, on the other, provide a long-term sustainable platform for the survival and growth of both credit unions, post offices and the indigenous economy. PBFI proposed that credit unions and post offices collaborate in the establishment of a network of 10 community/public banks supported by one central service provider. Credit unions and post offices will have the option of providing front-of-house services on behalf of the community and public banks, thus re-establishing a locally based full-service banking model to serve communities and the indigenous economy. This new dynamic, created through a spirit of cooperation between the three entities, will massively boost the entire indigenous economy whilst providing a risk-averse platform for savers, bearing in mind that credit unions presently have little choice but to deposit members' surplus savings in risk-taking commercial pillar banks. The new regional-based community public banks will present credit unions and post offices with a new alternative investment opportunity. Credit unions currently have 6 to 8 billion of underutilised members' deposits. Currently, the return available in these funds is unsustainably low. For example, Bank of Ireland are now charging credit unions for holding large deposits. Like the pillar banks, the new community public banks will leverage these funds using the fractional reserve system, but in a constrained manner, using a conservative ratio of 6 to 1, in line with the approach of the hugely successful German Sparkasse banking model. This could provide a massive boost to the indigenous economy throughout the regions. The regional community and public banks will recycle profits into making more locally focused loans available, whilst also investing in local community projects, again in line with the German Sparkassen model. Lending will be focused strictly on the productive economy, for example, SMEs, local micro-enterprises, construction, regional infrastructure, tourism, value-added chain in both agriculture and the marine, and on voluntary and cooperative enterprises. There will be no lending for speculative purposes. Thank you.
Thank you very much, Mr. May. Senator Conway Welsh.
Thank you, Cathaoirleach, and thank you for your presentations. And I suppose coming from a party that has long advocated the merits of a public banking system, you're pushing an open door in regard to this, so I want to see if we can make some progress today. And the first thing is, you referred a bit to the model being in the programme for government, and the Minister for Finance in a parliamentary question last month said that a report on it was imminent. Are you happy that you've had sufficient input into that report?
Yeah, we're happy insofar as we know the report is there. We don't know if it's been completed. And obviously there are changes in the new department, so we may wait to see what happens there. In all seriousness, we want to see this report back in the Department of Finance, because at the end of the day, it is the Department of Finance that will lead on this one way or the other, and we would really want to see it there. We are also clear, because we don't know what the report will say, but we're very clear that the report must seriously engage with the stakeholders, like Sparkhead, like ourselves, to look at the detailed perspective that we've put forward for the first of these banks. We're not sure it will, but maybe we'll be surprised, and we'll be quite happy to be surprised with that. But as far as we're concerned, any report that dismisses this proposal out of hand is effectively dismissing a major banking success story in Europe and Germany. So we really want the Department of Finance to take it seriously.
So have you had input, like have you met with the Department of Finance around this?
We've met with the Department of Finance. We've had we've had two meetings. The last meeting 2 weeks ago was an extremely good meeting. There was quite a robust debate and challenge on the subject. But again, we've made two invitations. One, we believe they do need to go to Germany to see how it actually works in practice. And the second thing is they do need to sit down for at least a day or 2 days to go through the detailed perspective. We spent almost a year on this alone, 3 years altogether, drawing up a prospectus as to how this would actually work in practice, and we need, and I believe the Sparkhouse reps need to be there for that detailed exploration.
Okay, I suppose what would concern me, if they haven't filled that gap by actually going and seeing the model working, and the report comes out and the report dismisses the model, then, you know, is that the end of it? Is there room there from once the report is done for them then to explore that further? And just when do you expect, I know they say it's imminent, the report, when do you, is it weeks you expect? The
report, I think, was to be out earlier in the year, but again, as you know, changes in the political scene. We're not sure exactly of where the situation regarding the report now, but we're very clear that the report has to continue to the next stage of exploration, because we would be really concerned if in any way it dismisses this concept.
Okay. How soon could you see the pilot project? Because I think the pilot project is the key to this, albeit I disagree with it being in the Midlands, or the business case being done for the Midlands. I think a really interesting business case would be to be done in an area like Ballyhonus, where one of the banks closed down. Yes. I'm not being parochial about it, but I'm sure Senator Burke will agree with me as well. But, you know, in an area where, and I think, I really am sold on this idea, and I think it really fills the gap there. In terms of what you're saying about, you see, decisions being made in banking now where they don't take the local environment, the circumstances of local families, whatever it might be, the local circumstances into account in using the matrix to assess lending and all of that. That has gone away from the main pillar banks now, that it used to be that you'd go into your bank manager, he would know how or she would know how trustworthy you were, and they would be able to build up a picture of making an assessment there. So that is gone. So a bank like this coming in could fill that gap there, and the trust. You see, what's coming back to us all the time as a committee is how trust has been broken down between the customer and the bank. So if you have a model like this that's going to fill that gap, I think it can only benefit not only individuals, SMEs, but society and communities as a whole. So I suppose what I'm saying to you is, if you were to go into an area where a bank has been closed down, try out this model, do you think that could be done tomorrow morning? If the Department of Finance came back and said, yeah, we think this is a good model, let's go ahead. We've assessed the risks in terms of a pilot project. Let's see how it works.
I will let Nicholas take some of that question, but can I just say also, yeah, Ballyhonus, I mean, what we've done is, and I want to quote Professor Patrick Honohan. Now, he's not exactly the wildest left-of-centre person in our society. And he said, speaking at an overview of the banking sector back in 2014, he said, there should be a second tier of banking which is geared more towards local concerns with local managers and a greater level of local awareness. We've proposed the Midlands because that was where our resources allowed us to do an exploration. And as Nicholas said, you know, it's quite a disadvantaged area. But we would argue that the 10 areas could be looked at as one as well. But maybe, Nicholas, I'll let you deal with how quickly we can do this. Because Nicholas and colleagues were involved in. This is a very detailed perspective, and by the way, this documentation can be available to you if you wish. This is not a back of the cigarette proposal. We have done, there's 102 pages of this, so, but maybe Nicholas, I'll let you take some of that question, okay?
Okay, thank you. Of course, setting up a new bank is nothing that you just quickly do and can do in a fortnight. It's not possible, especially when we are talking about a new type of bank, which is building upon old habits, old way of doing banking. But nevertheless, it would be a new system. I think setting up just one local bank in the long term will not be sustainable. It can only work from an economic point of view when you have a nationwide system where also you can share the costs with your other institutions. So that's why this central service provider that is part of the concept is so important, to make this a business that is sustainable in the long term. So it will take some time to get the pre-requirements in place, which would mean there would have to be a political decision, I think, for a new public banking model to be set up, because after all, there's the word public in it, and I think that's extremely important. So it is a political issue. But also there has to be the approval coming from the Department of Finance. The central bank also have to give their approval, which means there is some time which is needed to prepare everything. I would say when you have good circumstances, would be half a year, maybe it would be a year until a first pilot bank can really start and open the door to the public. But while this is, at the end of the day, it's rather quickly.
Okay, so just in terms of the pilot project, do you see a number of banks in the pilot project in being able to do comparisons with areas, or how would you see that work? And just in terms of the pilot, without a full commitment or full political or legislative commitment from government, or does all the political and the legislative stuff have to be done prior to the pilot?
What we've seen is, to start with, we have to clearly define the business region, the area that has to be covered. From the business plan that we made here for Ireland, it is clear that the region should have something like 200 to 300,000 inhabitants. Setting up a local bank only for a small community, it will be very difficult to run this bank in a sustainable way. So we have to clearly find the right region, and this is what we did with the Midlands, where then there would be some 4 or 5 branches in the region, so that it is not too far for everybody to get access to his local banks. And that also, which is extremely important, I think, that the local bankers there, that they know where their clients are living, in what circumstances they are living, that they know their clients. I think it does not make much sense when a loan application of a small enterprise is being processed somewhere in Dublin, or even worse, by a computer system.
I just want to ask you about the relationship with the credit unions, and obviously the trust between customers and credit unions is quite high, and they're looking to expand, and even in terms of addressing some of the housing crisis that we have and all that. So how much conversation have you had with credit unions, and how would you see both models fitting together so that there isn't a conflict or a competitive situation there?
So,
Yeah, well, I think in terms of the credit unions, we've had a lot of talks with ILCO and with the credit unions. In fact, we held a very successful public conference in the RDS last year, in which was attended by members of the credit union. We see this as being complementary, and I think our proposal is all around making sure that it is complementary. For example, in Germany, and maybe Nicholas, you could deal with that, what you call the cooperative institutions work hand in hand. So we are not designing something that will in any way inhibit or prohibit the credit union's success. In fact, it'll be in their interest. But maybe.
I think that should be one of the side effects of the new public banking system here in Ireland, that it also helps the credit unions, to strengthen the credit unions. They could offer, through the new public banks, services that they are not able to offer right now. They could use the services of the central service provider to make their own business more efficient. So I think there are a couple of ways where it is possible to strengthen the credit unions through this new public banking system. It's not a competition issue, but it's a question of how to cooperate.
Have credit unions given any kind of a public endorsement to this model?
I'm not aware if they have. They're talking to us. They're very interested in the concept. I think many of them, individual credit unions, see it as a major bonus in terms of their region. But I don't know if they've come out in a joint way in any way as yet, unless I'm mistaken. I don't think they have. But individuals have, so. But as I said, this is part of the exploration, because I think when we get the next stage of this exploration in process, it's important that what we design in an Irish context, which is not necessarily exactly the same as the German system, doesn't in any way inhibit the credit union, or indeed the post office system could be a bonus beneficiary as well. So that's how.
I do think those two key, and the post offices as well as shared in the credit unions, I think their reaction and their agreement with this, or their working with this, will be integral to the success of this. I think they are key actors in all of that. I know other people want to ask questions. I'll just ask you about just the interest rates in terms of, so if an SME walked into a branch that was open tomorrow, could they be assured competitive interest rates?
Well, of course, we are talking about competitive interest rates. We have an approach which is not shareholder value driven. So it's not about earning money, but about fulfilling a task. That also a public bank has to cover its costs, that's clear. So it's a question of how to organize the public bank in an efficient way so that the costs are being kept low. But when the costs are low and there is no shareholder who wants to make a large profit, then this automatically translates into lower interest rates that you would probably find today in the Irish banking market.
Okay, thank you, Cahill.
Could you just clarify that question or that answer? If I went into your bank in Germany for a mortgage.
Yeah.
And
You could go.
I wanted to set my mortgage for 10 years, tracker mortgage, what would the interest rate be?
1.1%. It's the best rate we have currently.
1.1%.
Yeah, fixed for 10 years.
Fixed for 10 years.
Yeah, for private mortgages.
Private.
Yeah.
Best rate.
When can you open? When can you open that branch?
Have you packed the bags?
Well, but once again, here, what I should add here is that it is only for local customers, because each Sparkasse in Germany, only for local customers,
Yeah.
because each Sparkasse in Germany is allowed to do business only in its own region. So Sparkasse Hamburg is not allowed to do business, open a branch or serve customers in Munich.
Yeah, but you must be competing with other banks.
There are other banks in the market.
So therefore,
Yeah.
are they offering the same 1.1%?
Probably not exactly the same, but in general, we have such a large competition in the banking sector in Germany that also the private commercial banks, like Deutsche Bank, have to offer low interest rates. This competition factor, actually, when you look at the Sparkassen laws in Germany, providing competition in the financial sector is one specific topic that you will find written down in the Sparkassen law.
You can still make a profit on 1.1%.
Yes, because we get the funding right now for free from the ECB or from our customers, which is the other side of the coin, of course. The interest rates for deposits, for savings deposits, are about zero right now. But people still bring their deposits to Sparkasse because they know it's safe over there.
Okay.
Makes absolute
Senator
sense.
O'Donnell?
Welcome. I suppose the questions I really want to ask are, maybe I'm going over all ground, but your financial structure, your capital, who owns the bank?
Wow, that's a tricky issue because I have to look back 200 years. When 200 years ago Sparkassen were set up in Germany, they were set up by the local authorities, by the municipalities, for example, or by the counties. And at that time, capital was nothing people were talking about. It was just that the municipality opened the door for poor people, that they could bring their deposits, they got a savings passbook, and that was it. And over the time, this business created profits. So the local communities earned money with that, and they put that money aside. Technically, you would call this retained earnings. So all the capital that we have today is retained earnings. So there never was capital coming from the municipality. But the municipalities are still today the trustees. Or you could say municipalities are kind of owners, although with limited ownership rights. So the municipality has its representatives in the supervisory body of each Sparkasse.
Your board, let's say your structure.
We have a two-tier board, yes.
And your board, who decides who goes on the board?
Well, we have two boards. We have the supervisory board and we have the management board.
The management board.
In the management board, the members of the management board are being selected by the supervisory board. This is the case for Sparkassen, this is the case for Volkswagen.
Supervisory board then?
Normally in a normal company, it would be the owners, the shareholders, would select the members of the supervisory board. And as for Sparkassen, it is the municipalities who are kind of the owners. It's them who sit in the supervisory board. We have a representative nomination here, so all political parties who have a certain number of seats in the local government, they can send representatives to the supervisory board. The members then in the supervisory board have to be approved by the central bank, and that is 2/3 of the members of the supervisory board.
Before I ask, the profits that the bank, the local regional bank earns, are they paid by way of dividend or where do they go? Are they paid out by way of dividends? Yeah.
Well, we use the profits in two ways. One is to strengthen the capital, because the only capital we have is retained earnings, so we have to put aside some of the profits for that. And The rest goes to the owner, which is the local municipality, which only can use this for social purposes. This again is written down in Sparkassen law.
If it was to be set up in Ireland, the model of bank, would it be an Irish entity or a German entity?
No, Irish. We are talking about Irish local banks. We don't want to be involved.
Who would set up the capital then? So the structure of setting it up from a capital viewpoint, who would go on the board? Does it have to be regulated by the central bank? How would that work in practice?
Well, this is still to be decided because we are talking about an Irish system, so it has to be defined in Ireland by the different stakeholders here.
And could you see any circumstances, and would you see them having a relationship business-wise with your bank in Germany?
A cooperation, yes, but I don't see any capital involvement. Okay. As I said in my initial statement, we don't have a financial interest here in Ireland. As German Sparkassen are not allowed to do business in the neighboring city, we are not allowed to do anything here in Ireland neither.
And the loans you provide to business, right? The range of loans, so would they be working capital loans? Would they be, let's say, current account facilities?
Everything, including leasing contracts, export financing, everything.
What would be the longest period of time you provide a loan to a business?
Tricky to say because it depends on what the loan is for. When you build a plant, then probably it will be something like 15 or 20-year loan.
So it's quite lengthy. And a mortgage, we'll say a home loan mortgage, what length of time typically?
Well, a mortgage, you can get a fixed interest rate for a mortgage of for 5, 10 or 15 years. That's the normal duration of fixed interest rate. But the mortgage itself, when you have 1% repayment per year, the duration of a mortgage is 30 years.
30-year mortgage?
Yeah.
And your funding mechanism then, apart from the retained earnings and the deposits from, what percentage of your funding will come directly from the ECB?
When I look at our total assets in the group of the Sparkassen, we have total loans of about 1,100 billion euros in Germany, in the Sparkassen, in the 390 Sparkassen, 1,100 billion. And we have total deposits of about 1,100 billion.
So you're nearly self-financing.
We are nearly self-financing.
So when you speak about being able to borrow money from the ECB, in reality you borrow very little money, if any, from the ECB.
Exactly, yes.
We're always balancing the model.
It's a benchmark. Yeah. It's a benchmark you use. What would you be paying deposit holders at the moment?
At the moment, about zero, yes.
Okay.
But anyway, it's quite interesting to see that total deposits are growing between 3 and 5% per year, because people keep on bringing the money to the local Sparkasse, not because they earn interest here, but...
In Germany, have you any credit union model? Have you any credit union
Yes,
model?
we have cooperative banks in Germany. There are about 1,000, a little bit less than 1,000.
How do they differ in their the type of business they do to Sparkasse?
Not much, because they fall under the same banking legislation, and they also realized, like Sparkassen, that when you have a decentralized system of local banks, that you need, in order to survive, you need a very strong cooperation in the group. So the setup of the cooperative banking sector in Germany and of the Sparkassen sector is quite similar.
And what do you regard as critical mass population in area for, my pronunciation, what do you call it?
Sparkassen.
Sparkassen. What do you regard as critical mass in terms of population for such an institution to be able to function?
Well, when we looked here at the Irish market, we saw that it has to be somewhere in the region of 250,000, maybe 300,000 people. Then this can be done in a sustainable way.
So you really are talking about, in reality, what, about 5 or 6 in total?
8.
8 in total.
8 in total, yes.
So, and the structure would be the same. So it would be, you'd establish it, maybe involving the local authorities. Mm-hmm. The initial funding to establish it, you're slightly different. capital will have to come, because you'll have to meet capital ratios for the central bank. How much do you anticipate it would take to establish the initial capital input to set up one of these?
Well, from the calculations we did for the Midlands region, we saw that there is a capital need of between 15 and 20 million euros, including the startup costs, yes.
Including the startup costs?
Yes.
And from that point, you feel that, and would such an institution, in your view, be able to borrow directly from the ECB?
From the ECB, but also from the EIB. We talked to the European Investment Bank, and they were also very supportive of this.
And the rate that you'd borrow from there with them, with the EIB?
It would be a low cost, but they have different programs. So
roughly?
Sorry?
Roughly an average cost?
Will probably, for the EIB, in the 1% area. For ECB, it will be for free for the time being, at least.
What margin on top, interest margin, would the bank have to charge in Ireland for it to be viable?
Well, it really depends on the cost structure that we have. When it would be one regional bank only, the cost would be higher, of course, and the costs are really defining what interest margin you need. So when it is...
Can I put it in context?
Yeah.
We have, you probably saw the earlier session, we have, under our chairman, we've currently a review going on in the central bank in terms of tracker mortgages across virtually all institutions in Ireland. Central bank are in before us next week, and it's the rates people were put on fixed when they should have been left on tracker. So, and you have people being charged 3 and 4% above what they were being charged on tracker. So the question, it's a very, very pertinent question. If such an institution was to operate in Ireland and be allowed to set up in Ireland, at what rate would they be able to provide mortgages fixed? We'll say you're saying 1.1% over 10 years with your institution in Germany. At what rate would they be able to provide a mortgage to customers in Ireland and be viable?
Well, I don't see any reason why mortgages in Ireland should be more expensive than in Germany.
Do you believe then on that basis, and not pushing to put you on the spot, but as an objective observer, that mortgages in Ireland at the moment for home loans are overpriced?
Difficult to say, because I don't know the cost structure of the banks in the country.
But you're saying that if looking at it here, if you were allowed by the central bank to set up an institution with a critical mass of population, so you could set one in the Midwest, where I come from, Deputy Kelly comes from, with the capital of Limerick, and we would have that critical mass of population, obviously with it located in the capital of Limerick.
Fair enough, for electoral purposes, you might as well.
And because we would fit that model in our region, we have thriving industrial base, but we have an SME sector, in a lot of cases, cannot get access to finance and home mortgages. Do you believe that you could charge, so the rate that you would charge for the home loans and the rate you would charge for an SME loan, what do you believe they could be and still be viable?
Well, when I look at the margin is more relevant than the absolute amount of the interest rate, because when I look at the long-term average for mortgage loans in Germany, 30-year average, it is somewhere in the region of 7 or 8%. So we have extremely low interest rates right now because funding is so cheap. But normally, a bank should be able to work with a margin of less than 2% interest margin. 1 to 2%, that's what you normally would expect an efficiently organized bank to charge.
And finally, like you're saying, your 10-year fixed rate for home loans is about 1.1% at the moment. What is it for an SME loan? A typical SME loan will say someone is looking to either get a working capital or stocking loan for, let's say, 40,000, or they're looking to build a plant for, let's say, 120,000. Typically, the working loan would probably might be a one-year stocking loan, or it might be an overdraft facility over a year, or the building might be a loan for maybe typically here would be 10 to 15 years would be the typical length of a capital loan for an SME?
Today I would say it will be somewhere around 3% for a long-term loan for an SME, small and medium enterprise.
And your current account then will say a stocking loan, that's a capital loan for 3% for a building, but let's say it's just to someone, will say in the farming sector, or someone just doing an overdraft facility, what would you charge?
Well, overdraft is expensive because it is a very flexible loan. So for an overdraft, you probably would have to pay some 7-8% for an approved overdraft, I have to say. While for SMEs, we are very much looking at the risk situation of the individual lender. So the riskier this is, also depending on our experience, the track record we have with this client, the more risk, the higher the interest rate will be. When we have the impression that this is a very good client of ours whom we know for ages, and where we are really convinced that what he is doing makes a lot of sense. And we are not looking so much here in that case on collateral. It's the business case. It's the cash flow analysis that we do that is decisive here. And then, well, there can be differences of 1-2% between a good or not so good client. So it has to be dealt with very individually.
Thank you.
All right, Senator. Deputy Doherty.
I was just Googling Article 45 of the Constitution, Mr. May. A very interesting presentation that you put forward, and I want to welcome everybody here. As my colleague, Senator Walsh, mentioned, we're long supporters of the concept of public banking. And I recall in Mr. Boland, your submission, the comments of the former Governor of the Central Bank was I can remember questioning him that day, and I was surprised of his comments because, and I put it to him that he was in support of a Sparkism model, and he volunteered those comments in fairness to him. So I have a couple of questions in relation to that, and I'll be brief, but I want to say from the outset that given that there is a report now that it has found its way into the programme for government, we've seen it in other documents, for example, the economic forum that took place. I think it's important to recognise the small number of people who, in the middle of an economic collapse, when our banks were leaving and collapsing and gone into liquidation, that people had a vision and foresight to look at the gap in banking and, you know, to come up with this idea, which many people thought maybe was daft, and pursue it to a point that it's in a programme for government and that it's been taken very seriously by agencies. And I think that's worthwhile, and we need to encourage that type of attitude and belief. Can I ask you in relation to we discussed earlier on, or my colleague discussed with you earlier on, the interaction between the Department of Finance and yourselves, and this is for anybody. But in relation to the central bank, we knew where the previous governor stood on this issue. He was obviously open to it, believed that there was a second tier of banking required. Where does the existing governor stand on this issue, to your knowledge?
To my knowledge, they'd be particularly neutral. Their position is they have a particular job to do under the new banking relations or regulations, and they await effectively a political decision. And once that political decision is made, then they will do what they always they're not against it, they're not for it, they're neutral.
Okay. And another question I have is in relation to just the Sparkism model. And can I ask you, because this isn't unique, you know, there was a number of questions in relation, will it be the Germans running this bank or will it be yourselves running the bank? But can you just maybe talk to the committee in relation to the role that you provide in assisting different areas of developing this type of banking model? And in particular, have you been engaged with any other jurisdictions outside of this jurisdiction over the last 10 years in relation to such a model? And if you could also inform us whether that has progressed in any way.
Yeah. Well, to start with, we had the chance, the big opportunity to set up a new Sparkassen system in our own country. After German reunification, we had to restart the Sparkassen system in the former GDR. So in the year 1990, we really had to set up a new system over there with the, well, good starting background, of course, of the common political and legal system. But nevertheless, it was a big challenge to set up new Sparkassen everywhere in the former East. So this worked out pretty well, and after a year and a half, they already had reached break even. So that was extremely successful. And when you look at the former GDR right now, you will find many regions where there's only a Sparkasse, nothing else today. So they are really successful. After that, we helped to restructure the savings bank system in almost all countries in Eastern Europe. So we helped to restructure the Russian Sberbank. We restructured the savings banks everywhere from the Baltic countries through Poland, the Czech Republic, Romania, Bulgaria, set up a new savings bank in Serbia, for example. So that's a lot of work that we did from mid-1990s to 2010.
Just on that, when you say that he's helped restructure, can you just elaborate on that? Is it Sparkassen going in, or is it doing it on advice? Is it that you are contracted and paid to provide advice, or how does that work?
Well, we had different models. We had some savings bank Sparkassen, like in Russia, where the Russian government paid for our services. We had other countries where we had an agreement between the governments. So, for example, what we did in the Czech and the Slovak Republic, there was a contract between the German and the Slovakian and Czech government regarding the restructuring of their savings bank. In Bulgaria, it was the European Union who gave financial support for the restructuring for the bank as well as for what we were doing. We were doing, in that case, means the Savings Banks Foundation. We are a non-profit organization, but at the end of the day, we have to cover our costs. So we were doing all these tasks in the East on a cost-covering basis. And today, maybe coming to your more recent issues, we have been dealing with this issue in Greece. So I think next week, my colleague Harold Felsen will be with the central bank in Greece once again to see whether, well, local public banks can be something like a plan B for the Greek economy. You have been to Wales, I think, recently. So there are discussions going on in Europe as well.
And this is my final question, because a lot of the other topics are discussed, and I assume, like, it's very interesting, and you know, the mortgage rate issues, but obviously there will be the rates in Ireland will be unique to the circumstances in relation to a new Sparkassen model in Ireland. I take that as a starter, and just in case anybody thinks that we're going to be giving out loans at 1%. But the last two, although we would love to see that, but you know, let's not get carried away with ourselves at the start. The last two questions I have is this. So we have set up a banking corporation company. Basically, it's not a bank. Actually, it doesn't have a banking license, although it's called a bank. And I assume that the reason, it's a non-lender basically, and obviously money comes from the KfW in Germany to help that, and it's assisted businesses, and it will assist farmers in particular in the last round and so on. But it's a non-lender to the banks, and one of the reasons it's a non-lender, I assume, is because it doesn't then start into dealing with state aid complications. And the question I have for you is, how do you, if state money, if public money goes into the setup of a new public banking model, and therefore while we know that the pillar banks are not, you know, delivering to this market in the middle, they will claim that they are, and you know, they'll show on their books that they are providing to SMEs and so on. So how do we stave off a challenge in terms of state aid implications that we would be supporting or distorting competition within the sector if it comes from the public purse, or is the view that the capital would all be raised on the private markets?
Well, to start with, what we are suggesting for Ireland is a similar model to what exists already in the EU. So from a DG competition point of view, I don't know whether this is going to be a big issue. Anyway, when I look specifically at SBCI and what they are doing, while we have a similar model in Germany, we have KfW, who is an on-lender or who is providing capital or funds for specific purposes. So there are lots of programs that KfW is organizing, but they are not lending directly to the clients, but it's always going through a bank. And sometimes with risk sharing done together with the bank, which can increase the outreach, the capacity of certain lending programs. And of course, in Germany, KfW is neutral, competition neutral. That means that all banks can use the programs and funds that KfW is offering. But at the end of the day, when you look at who is really working together with KfW, who is really the bank who is using the funds that KfW is providing, then it is normally for 89% it's Sparkassen and cooperative banks. The commercial banks are not really interested in this type of on-lending. It's just not profitable enough for them.
Final question is this. So we're waiting for the report. I've been told through parliamentary questions it's imminent, so God knows when that is, whether it's next week, next month, or sometime next year. But what do we need to do for those who believe that there needs to be another layer, another tier of public banking? What are the concrete steps that need to be taken, in your view, to move this beyond the hypothetical to the real?
Very simply, Deputy, the report needs to be published, obviously. As far as we're concerned, we would hope that the report will look favourably on the concept. We would be extremely disappointed if it doesn't. But assuming it does, then the Department of Finance need to engage directly with Sparkasse and with stakeholders generally and look at the detailed perspective that we've put forward, or any other way they want to do it. They need to visit the Sparkasse set up in Germany and see for themselves. Or alternatively, Deputy, they need to come up with a different idea. We've put forward a solution, and I'd like to say this, Chair. Irish Link, we're often criticised at times. We always know what's wrong, but we don't know how to fix it, or we never come up with a solution. So we've put forward a real solution, a real detailed solution. So we wanted to get the respect it deserves. So we want the Department of Finance to engage at the highest level in a serious way to explore this concept and to tell us either why it won't work or why we think it will work. That's what has to happen. But we also need your support here at this committee. We need deputies across the House to support it strongly, as indeed the various organisations in what's called, in outside of the House are supporting it. So all of that needs to be to give a clear message to the department that this has to be explored. And, Chairman, in a healthy economy, in a healthy banking economy, are we satisfied, and this is the question, are we satisfied with a system where we have Main Street banks and credit unions, and in the middle, nothing? And I think if we say we're satisfied with that, then I think we're heading for the next crash.
Well put in the pitch for Donegal as well, given the region most likely to be negatively affected as a result of Brexit.
Deputy, we think all 10 could be set up, or all 8 could be set up. We really do.
We can all arm wrestle at the end of this for.
We still have Dublin and Tipperary to come in. Senator Byrne.
Thanks, Chairman. I'd like to welcome the deputation as well. I remember a number of years ago, I was speaking in the Shannon, and there was a new bank opening in Ireland. I think it was in the early 2000s. And I felt that there were too many banks in Ireland at that particular time. Because if you take my hometown of Castlebar, a population of 15,000, I think there was 14 places at the time that you could get money from. We had the AIB, Ulster Bank, Bank of Ireland, Irish Nationwide, EBS, First Active, Credit Union, National Irish, ACC, and I don't know how many more. And now we have much less than that. But what you have said there is that you would have 8 of those individual banks in the country, in various regions. Now, I come from a county with a population of 130,000. So you wouldn't have one bank. You wouldn't have a bank in Mayo. So Galway has about 170,000. So you'd have one bank between Mayo and Galway. So how on the ground, can you tell me, how would it work out on the ground? You'd have an office in Galway City, more than likely, at the centre of population. Mayo, parts of Mayo are over 100 miles away from that. So can you tell me how this would work on the ground?
Well, from a technical point of view, I think it has to be a mixture between some physical branches on the ground, because you have to be close to your clients. People have to see the face, and you have to see your clients. On the other side, you also need to use technology to some degree. So offering mobile banking services, offering internet banking, for example, this is something that you have to do today. We're not talking about old-fashioned banks, but we are talking about modern banks where everybody can get access physically or technically. The number of branches in a specific region, it has to be decided on the spot. One has to see what's possible. I only know from the Midlands where we are talking about 4 or 5 physical branches that will be set up in medium-sized cities.
I'd like to add, I think what we've said in all of our proposal, and let's face it, we're not saying we know the answer to every single question, but on this one we would suggest strongly that if we explore the model as I suggested earlier on, we probably will find a role for either the credit union or the post offices also to engage with this process. And as Nicholas said earlier on, it is possible that designing the Irish Sparkas is what we have to do. I can see those entities coming into play. And remember, it is relationship banking we're talking about. So really, if the bank is far removed from its clients, then it's not doing its job. So we may, in the design that we're proposing, have to look at that. And it may not be Galway City, by the way. It could be Ballyhonus or wherever.
It may well be, but what you say in your submission is that each regional public bank will be an independent, fully licensed, professionally managed financial institution with its own bank, its own balance sheet, and responsible risk management. So each of those are individual. So it should be up to the region to decide how many banks it be or smaller branches. Of course, the more smaller branches you have and the more mobile banks you have, the more expensive it would be and the more it costs. There lies the kernel of the question. You're speaking about 1.1% of a mortgage interest rate or whatever. If you have more of those throughout the county or throughout the country, it's going to be more than 1.1%. Wouldn't that be true?
Yeah, I think it's really key that you keep the costs down, because at the end, this is what really benefits the clients. So I said earlier that I think a bank normally needs a margin of between 1% and 2% in order to work in a sustainable way. So you really have to reduce the cost. That's why I think a central service provider, where all the back office functions in a bank can be outsourced to, that's extremely important for such a system. So, for example, when I look at the 390 Sparkassen that we have in Germany, all independent institutions, but they use one IT system, which is provided by a central service provider. So not each bank has to buy its own IT system, but it is shared by 390 institutions, which is reducing the cost dramatically.
So what you're really saying is, you're saying that there isn't one for everybody in the audience, and not alone that, you're making the case for all of the other banks that they can now say that we have too many branches. Isn't that what you're saying? Really?
Well, I think branches are important to have.
Of course they are.
So reducing the branches, closing the branches, I think it's not the solution. It is a cost reduction measure, but it's nothing that leads into the future.
I hope it comes on stream. But.
Okay, thanks, Senator. Mr. May, yes.
So, in response to Senator Burke, we must remember that we're a very small country. We have only 4.5 or a little more than 4.5 million people, and we cannot go about reinventing the wheel. And it'd be our view in the Public Banking Forum that, well, first of all, this idea of public banking and the Sparks model, which is absolutely badly needed in Ireland, but it won't fly logistically or politically unless the credit unions have a key role to play in this. And we see that the public banking services can be rolled out through credit unions, obviously subject to agreement with credit unions. So a lot of the public banks can roll out their services through credit unions and keep the cost base down and make use of the existing credit union movement and their strong association with people on the ground. It's very, very important because, like, we do not have 10 or 20 or 100 million people. We're tiny. So we've got to tailor this both politically and logistically to what will work.
Senator Riley?
What you're saying is that the credit unions would be key to this, because the credit unions have up to 10 billion or 12 billion on deposits that they're not getting any reward from the banks. So this would be a key part of the funding that you would have for your 6-to-1 ratio as well.
Yes, from our perspective in the Public Banking Forum, credit unions and the relationship between the new public banks and the credit unions is absolutely key to this working going forward.
Senator James Riley.
Reduce bar fault Gadina Dini aus Rural Link und willkommen and guten Tag to the people from Sparkassen. I'm very interested, and the chairman will probably, I'd say at some point, I've never shown my face at this committee before, but as spokesman for Jobs and Enterprise, I'm very, very much interested in what you're saying, very, very interested in your model of what I know of it, and I'd like to ask a few questions if I could. First of all, you know, I mean, from my understanding, and you can correct me if I'm wrong, this is back to old-style banking, where, you know, you would go and walk the farm with the borrower or go and see the businessman or SME in his premises and have a look at what he's talking about or what she's talking about. And that's to be welcomed. There's no doubt. I'm sorry I wasn't here for Mr. Boland's presentation, but I've read it, and you hit on the point that I would very much feel that there's a huge distance now between the big pillar bank and the customer, which, you know, a lot of people find difficult. I was going to make a comment about your plea for support from the deputies. You might want some support from senators too.
Of course.
I wanted to ask you, though, on a more serious note, what is the range of loan size that you give out? This is more for Sparkassen, I suppose, in terms of, you know, like what's the minimum, 20 grand to the max $500,000 or whatever. I'm not clear on that. I really would, and I know that Mr. May has alluded to this in some way, but, you know, your relationship, how you would see it with the credit union, would it be collaborative, complementary or competitive? In relation to the supervision, because obviously that would be a huge point, oversight and supervision, what sort of supports will be coming from a Sparkassen in Germany in relation to that? I know you've already said it would be very much an Irish bank, and the local, that bank would have its branches, would be an independent entity with its own balance sheet. How much, and what would the relationship be then with the bank in Germany in terms of the ongoing, once it was set up, if it were to be successfully set up? Obviously, I think you've indicated already the profits would stay here with the bank here, and the rule would apply that it could only be used for social use. I presume that's what you would want to see happen here as well, and the same as in Germany. Can I say that I think it sounds like very good news for SMEs? And I was interested, and I was glad to hear Seamus Boland allude to the post office, because, I mean, obviously, if you already have an existing branch structure there where people can go locally, then there's an opportunity for a synergy there with our post office. And clearly in rural Ireland, this is very important to people. If they can't do their banking locally, if they're not IT savvy or particularly comfortable with it, although one would imagine that most people involved in business will be at this stage. So just before I finish, I will ask, rather than asking more questions later if I can, what you would like to see as next steps in terms of a working Irish-German group and obviously the legislative change that might be required. I mean, that's obviously going to be something that will arise out of your negotiations with the Minister and the Central Bank. So just again, to thank you for being here, that I certainly think there's huge value and opportunity here, and that we should find a way to make it happen rather than invent ways not to allow it happen.
Okay, so I'll try to answer these questions. There were 3, 4 that I put down here. I hope I didn't forget anything. To start with, loan sizes in Germany for small medium enterprises, I think it is everything between, say, 5,000 and 50 million euros. So whoever comes to us, we try to serve him. If it's a small entrepreneur, if it's a local plumber, he will get a small loan. If a large client comes who wants to build a plant, we also will try to serve him, as long as it's somebody who is coming from the region, because each Sparkasse only serves companies from the region. We have our strengths. Our strength is with small enterprises. Here we have about, when I talk about small enterprises up to 10 people working there, we have a market share in lending in the German market of 70%. So this is really a big strength. When it comes to lending to large companies, to the Volkswagens of this world, our market share is about 0. This is not our pair of shoes. We focus on small, medium-sized companies. So when I look at companies up to 500 employees, which would be typically German Mittelstand, we have a market share of about 40%. So I think we are quite strong here. Talking about Ireland, relationship with the credit unions, we think they are very valuable partners. We do not want to compete with them. We see them as our national-born partners in this case. What I could imagine is that credit unions can work also as agents and sell products of the public bank, kind of products that they don't have right now for their clients. So I think here a cooperation is possible, and I come to that again when you come to your question about the next steps. What is our role here? Well, Sparkassen in Germany are working on the regional principle, so Sparkassen are not allowed to open branches in other countries. So Sparkassen from Germany don't have a financial interest here. We will not set up branches here. We give advice. That's our task, the task of the Savings Banks Foundation. We give advice. We bring our experience here, which concretely means that we help to develop the concept, but that we also help to keep this running, or to start the business and make it sustainable. So I would say when we are thinking about a 5-year period until the whole nationwide system is running, during those 5 years we would be here to support this with our staff, with our people, with our expertise. And this is something, well, we don't bring capital, but we bring a reputation. We not only bring a successful model here to the country, but we can also give our German reputation to it so that people in Ireland have trust into the system. I think when it comes to financial matters, at least, people tend to trust the Germans. And also what we bring, you don't have to love us. And something that's, I think, even more important. When we help to set up public banks here in Ireland, we put our reputation at risk. Because if this does not work here, with all our support, then this will backfire. Then this will hurt us in Germany and on the European level. So we are very, very serious about making this successful. More serious than if we would just give capital. Talking about the next steps, well, Seamus, you mentioned this already. There has to be something concrete that would follow up now. And I think something like setting up a working group with different stakeholders, 1, 2, maybe 3 different departments, those departments who are involved already. That would be useful. Different stakeholders also would include the credit unions here in Ireland, because they are natural partners for this concept. And, of course, we also would be willing and prepared to join here this working group to bring in our expertise. Because at the end of the day, this working group has to develop the Irish model. We know, for example, that a legal form is important. Should it be a normal legal form of a bank? I don't know. Maybe it should be something different. We talked to people from Trinity College who proposed their own legal framework that they have. I would say, sorry, a strange thing called body corporate. I don't know whether this would work for a public bank here in Ireland. But as we said before, it has to be an Irish model. Many things can be taken over from Germany, but not all. As closer to Germany, as the easier it is for us, of course. But at the end of the day, it is a political decision here in Ireland how an Irish public banking model should look like. We can be involved as technical experts, but the decisions are yours.
You finished, Senator?
Yes. Thank you.
We give participants plenty of time.
Very efficient.
Your language skills and presentation there, I'm sure, has impressed our visitors and all the members. Deputy Kelly.
Thank you, Chairman, and thanks for facilitating me. I have a huge interest in this. I left public accounts there to come in here because I wanted to support this, but I've been following this along with, to be fair, my colleague Willie Penrose, who's taken a big interest in this and written about it and raised it in the Dáil and expressed his love of the Department of Finance on a few occasions publicly. All my questions have more or less been asked, so a few observations and just 1 or 2 questions. There's no such thing. I despise the words best practice, right? When I see them inside in reports or anything, it just annoys me because I don't believe in it. There is practice which you can learn from, right? And then there's circumstances. So in relation to, and I'm very glad it's been outlined here, we can't pick up what you're doing in Germany and put it here in Ireland because our circumstances are different, very different, many different reasons for that. Social reasons, every other reason, legacy issues, psychological issues and all that. But we can take the practice, which is very good and a proven model, and bring it into Ireland and mould it and shape it and use it. And that's what I want to see happen, because I fundamentally totally believe in this. I believe that it's completely necessary. The disparity we have in this country between the pillar banks and credit unions and the big vacuum in the middle is causing absolute, so many issues. I had a gentleman come into my office very recently. He actually owns a shop very near my office. But of course he applied for a loan and was turned down and all the usual, did the review, everything. And he just wants to expand. He's actually a success, moderate success, small business. He's had his review. The review has said that the bank should obviously give him his loan, and they found against the bank. And they actually then did make an offer, which was completely unacceptable on purpose. He's now going to the end of that process, and I believe he'll probably be writing to you, Chair, as an example. It's gone on for years, like years. So it's totally necessary, and we need to do it. I'm glad it's in the programme for government and all of that. I have serious issues with the Department of Finance. I had them when I was a minister. I still have them in relation to pace and decision making. I think there is a serious negativity in the Department of Finance in some quarters in relation to this. So one of my first questions relates to that and your interactions with the Department of Finance. Maybe if you could break them down for us. Second question relates to an example, the European Investment Bank and how it links to SMEs. Do you use that? That's the second question. I I agree with you in relation to credit unions and the role. Do we see a role for the post office network in this? And how? And if that's been asked, I apologise because I was in the other committee. So that's the third question. I'm trying to avoid the other questions that were asked because I don't want to repeat them. In relation to when this famous report will be published and all of that, which I'd hope, and no better man than the chair to put pressure on to get the report out. But if we had utopia, which doesn't exist and never will, but if we had a decision tomorrow morning which is very much in favour of this, and my colleague asked about next steps, and you outlined them in fairness, but as regards your capacity to help us, are there any issues we should know about? Like, it's very simple. Any issues we should be aware of in relation to the scale of this project or anything that would impact on that? And the one thing which I don't think anyone did ask is, and these are very varied questions because I don't want to repeat them, but timelines. So the report comes out, engagement with the central bank, the Department of Finance engage. We're obviously going to have to pass legislation. We're obviously going to have to meet requirements, central bank rules, all of that, etc. The whole capital ratios, everything, all of that. And then the process of rolling out, probably take a demonstration area, probably in the Midlands. You might dip it down into North Tipperary if you can. And just how does that work out, and timelines? So they're my 4 questions.
Well, just
You start on that.
I'll start and Nicholas will finish. Okay.
Oh, sorry, I just don't want to be rude. There was one very thing that I had the 5th question, and I was very much taken by your impact on other banks. I love that, by the way. But can you just also explain that? So your model rolled out, and you basically wiped the floor with the banks that were in the region, and they actually left, by the sounds of things. Or did they just get out of the market that you're in? Or what happened? It's just a piece of information that I didn't know about, so that was the last one. Sorry.
Okay, right. Insofar as the process we're in, look, we've put in our submission to the Department of Rural and Gael. I'm still calling it that. And they've considered so far as I know, and they are producing a report. They have worked, and we're very happy with the way they've worked with us. They've been particularly intense and all of the rest. However, we don't know what the report is going to say. We know it's been delayed. We do believe strongly that we need an indication from the Department of Finance, particularly because while the Department of Rural has certain, I suppose, strengths and all the rest, at the end of the day, it really is finance that's going to have to make their position clear. So that's where we are. And insofar as that determines the next steps. And as I think Nicholas pointed out, I think it would be strange if a report comes against this, because effectively it's being, by implication, it's criticising a model that's worked very well, that has escaped the banking crash, and that has been a major reason why the SME in Germany is still very strong. So that's what we want to see next, and after that, as I outlined earlier, put together the working group, a real working group, to consider the detailed proposal that we have put in. And the reason we chose the Midlands, let's be clear, well, I'm from the Midlands myself, as you know. But
Anything to do with the lady sitting beside you now?
no, Sinead has just joined us, so she's learning a great deal at the moment. But no, it hasn't, in the sense that it's 2 or 3 years ago since we did that. But part of our thinking would be that even putting a pilot project in just one area mightn't be the wisest thing to do. And this could be a finding from finance, because I genuinely think you're either going to set it up or you're not. And even a pilot is almost like, come on, you're either sure or you're not. So we genuinely think the brave thing to do and the wisest thing to do would be to approve the concept, look at the investment needed and where the capitalisation is going to happen, set the legislation in place to make it happen, and then be wholehearted behind it. And that's really the right thing to do. I personally, and I'm Nicholas, you can disagree with me on this, but I personally don't want to see one area picked because the rest of you will be all giving out hell about it. I want the 8 areas to be picked. I want the legislation to be put there, the regulation sorted, the finance and capitalisation sorted, the central services office set up, and start with the 8, because we're either with this or against it. And just to remind ourselves, Chair, and I know you know this, Alan, because personally I set up a small piggery out of the ACC when no one else would help me. But it's not as if we haven't tried this before. And even though it's popular to say that the banking pillar establishment have made such a hames of things and they're still recovering on the rest, back in the 70s and 80s, the reason we had to establish the ACC and ICC was precisely the same reason as they are now, that the main banking pillar establishments find it difficult to deal with the thousands of small business companies, farmers, most farmers that have done well over the years. I guarantee you 90% of them started out with a small loan in ACC, not the pillar banks. So it's nothing to do with the recession, with the banking collapse. It's the reality of pillar banks. And in Germany, it's the same. The pillar banks are not the best supporters. And the reason, Alan, our deputy, is in your situation, when you asked the question about did you wipe the floor with them, the truth is they didn't really want to be there in the first place. And at the moment,
that's a good answer.
yeah, at the moment, we have closures of banks, left, right and centre. You know, one of the days we met the Department of Finance, and I want to take that question as well, there was a big ad in all the newspapers telling nationwide customers what they were going to do because they were pulling out. So I don't think we're going to in any way inhibit the pillar banks by setting up this. They weren't affected when the ACC was there. And come to think of it, neither was the credit union movement. The credit union movement thrived during the ACC period. So we're like, people must, as you said, Senator Riley, it's finding ways to make this happen. And as I said, we're not answering all of the questions because, truthfully, the Department of Finance, the Central Bank, has to provide answers as well. But it's making it happen. And why we should even be slightly afraid of it, given that we had the ACC, which done no harm to either the pillar banks or the credit union movement, why we should be afraid of it, I have no idea. But definitely, the current situation is not. Sorry for going on a bit, Chair, but that's just to make...
Might just answer the question, just one on the post office.
The post, yeah, again, I mean, it's back to what is the local agreement that is best served the region that you were talking about. And we see the post office. I mean, we're meeting on post, I believe, on this as well, and we think there's a role for the post offices as well.
Yeah. Mr. Urban, do you want to answer some of the questions?
Well, maybe I add something and then, Seamus, you can. Yes. Then I'm packed in between two Seamuses, that's fine. You talked about, Department of Finance and timeline. I liked your structured approach because I fully agree with you. Well, after all, I'm German. We like structured approaches. No, I think everything has to be in place before this really starts. Things have to be sorted. And it is not, as you also said, it's not about setting up one bank in one specific region, but the whole system can only work if it is a nationwide system. We need the 8 banks, we need the central service provider. Only then we can really reach or come to a sustainable business model. So I fully agree with what you said. AIB, you mentioned this. Well, not only in Germany, the Sparkassen are working with EIB funding. It's cheap funding for specific purposes, that's fine. But also, we had a discussion, Harold and myself. We were in Luxembourg with the AIB already. We talked to them and asked them what they would think about such a local banking model for Ireland, and they were very, very positive about that. So I think it will not be a big issue to have access to funding from the European Investment Bank for specific purposes, for loans, for on-lending to clients. So this is on our agenda also. You asked, last question was about impact on other banks. What impact do we have as Sparkassen in Germany? Well, we increase competition. So I think when we sometimes hear the German pillar banks like Deutsche Bank complaining that they don't earn enough money on retail banking, well, I would say we do something right. Yeah. You will probably have about the lowest financing costs in Germany and all of Europe. And this is because there are more choices for the consumers, which also means, well, looking at the number of branches. Sparkassen have about 12,000 branches in Germany still today. Deutsche Bank has just decided to reduce the number of branches to 500. So they are sometimes leaving the regions because in any specific region they might only have 1, 2, or 3 clients whom they want to deal with. It's not that the clients don't want to go to them, but for a Deutsche Bank, for other private commercial banks, they are focusing on specific clients, high net value individuals, large corporate clients who do international business. So, well, we are there, we cover the big market here, and it hurts other commercial banks, that's true, yes. And the final question, not the final, but another question you asked was about what restraints do we have as the Savings Banks Foundation to support this. Well, we have been working here in Ireland for the last 3 years now, coming here first in the year 2014, and we've been working here on a pro bono basis. So we are covering all our costs, which includes travel, accommodation, flights, whatsoever. So that's what we can do as long as it is in the design phase. As long as it is about setting up the model, I think this is the way we can continue. When the support is more intense, when more support is being needed for setting up, physically setting up banks, then we have to see whether we can continue to do it on a pro bono basis. Probably not, but it would be on a cost-covering basis like we've been doing for the last 25 years in many countries of this world.
Seamus, may
Just a couple of clarifications in relation to the most recent questions. The Public Banking Forum, its proposal, which has also been put before the Department of Finance last March, we include in the model the possibility of the credit unions and the post offices taking part in this new system. But we shouldn't forget that, you know, in Ireland currently the pillar banks have 95% of the market. In Germany, the pillar banks have 12.5%. So we shouldn't exclude from the conversation this morning the possibility of the post offices setting up their own model based on the Kiwi Bank model. The Kiwi Bank was set up in 2002 and it has 20% of the market in New Zealand. So even if we were to have another entrant into the market, such as the post offices, to take 20%, there's still a huge gap in the market for what we're talking about here with the public banking. And like Public Banking Forum would wholly and totally endorse the Sparkassen. We believe the credit unions can form a huge part of this, but they cannot do it. They don't have the expertise. They cannot do it without the input from the Sparkassen people. It's simply a no-brainer. And just one final point, and it's just slightly removed. It's in terms of this overall funding model, and we're looking at the housing crisis in Ireland. The Public Banking Forum believes that a variant on our own model here could be set up in place to fund distressed house mortgage and distressed business mortgages. We've all heard that money is available at as little as 0% over there on the continent, and we believe that by using a special purpose vehicle and the fractional reserve lending system, that we can put a very significant fund in place to deal with distressed mortgages and distressed business loans.
Very much. Just on the suggestion made by Deputy Kelly on the report, I mean, with the agreement of the meeting, we can ask the current position in relation to that report, ask the Department of Finance, that is, and maybe we should ask them to send us a draft copy of that report so that we, as stakeholders in it, because we will be dealing with it as a committee, that we should ask for that draft report where it stands now, so that we can maybe debate it and put some speed into the process, as Alan Kelly has said, and bring it to some sort of formal conclusion.
Support you 100%.
I don't know, Sinead Dooley, whether you want to contribute or not. You're the only female here in all these suits talking about banks and everything else. Is it something that you'd like to see?
I'm delighted, Chairman, that you wanted to bring gender balance only,
Yeah,
that I have
exactly,
nothing more to offer than my gender. No, just I think, Chairman, my colleagues, learner colleagues, have been very eloquent in their presentation here today, and just to thank you and your committee for affording us the opportunity of doing so. And it's heartening to see the level of support around. I think every deputy and senator that spoke, their knowledge of it. It's obviously not the first time they've their homework done and are aware of the concept that we're speaking of today. But it's very, very heartening to see the level of support it's receiving. And I hope that we can harness that support and bring it again, put pressure on the Department of Finance, who are the key people in all of this, to just let them see the merits. And I suppose there's a lot of discussion around the National Planning Framework at the moment and our plan for 2020 and Rebuilding Ireland. And while we all talk of infrastructure and investment and telecommunications, equally we believe that investment in our banking sector is equally important towards trying to achieve balanced regional development. And I think if that's the message today, if we're serious about balanced regional development, we need to look at every aspect. And nobody has remained at a standstill post-crash 2008. So it's unbelievable to think that we would accept that our banking sector would remain in a standstill position. We need to look at every sector. Everybody had to take a look at how to do business after the crash, and I think it only makes perfect sense that the banking sector should do likewise and see how we can build sustainable pillars, and not pillars of salt that we had in the past, but sustainable pillars to look towards seriously rebuilding Ireland, and I think our citizens deserve that. So they're my comments, but certainly to thank you, and any pressure you could bring to bear to bring forward that report for further debate would be very welcome.
We've decided to do it, and I'm thankful for the members who were not normal members or members of the committee that they're here, because it does add weight to the argument and the case being put forward. And I would encourage the government parties, and I'm saying this in a cross-party sense, to encourage the Minister to look favourably on that report and to include us as a committee in the consideration of the outcomes of the report, so we can debate it. Sorry, Senator, did you want to ask?
Yeah, just a couple of very brief questions.
Yeah.
Is that okay?
We have to wind up.
I know that. I know we've time deadline. I think it's 1:45, and it's just very briefly. And thank you all for your opening statement in your presentation. I had a couple of other things I had to go through, so I was kind of nipping it out. So any of these questions that have been addressed already in my absence, I apologise. And I think just on your point, Sinead, regional development, I think, as somebody who's based in Dublin but as a senator went around the country to every local authority from Donegal to Wexford and from Louth to Kerry, everybody in Dublin really wants the regions to do well, because if everything happens in Dublin, it's the pressure on housing in Dublin, schools in Dublin, open park spaces, football clubs, everything it's a pressure. So we'd love other parts of the country, as people in Dublin would love if other areas are developing and growing and prospering. But it does bring me to, I suppose, one of the areas is if they are regional banks and you're only can to lend and borrow in a region, how does an area that's relatively deprived to the other areas find the finance? If the money's not there in the first place, or there's less money around, is that a problem for a very disadvantaged or relatively disadvantaged area? Because you know, there are parts of the country, loads of money available, loads of money can be lent out, but if there are areas that don't have a lot of money in the first place, how do they prosper? That's just one point. I'll just go through I suppose the other questions were, you know, it's not government owned, it's public owned, or it's, so, but does the government, would there be a cost to the government of setting it up? And we're acknowledged, I suppose, just what kind of quantity of money would be required? Either is it as a kind of a seed capital to get it going that it's repaid, or is it the government would have to put in a certain number of million or billion and leave it there? And then I suppose just the impact of the bank, would it have, what impact might it have on the credit unions? Or, I mean, the commercial banks in the last number of weeks haven't done themselves any favours in terms of how they were interacting with us in the tracker mortgage scandal. There's a lot of goodwill, I think, towards the content that you're suggesting, because maybe the fact that people are so annoyed with the various discussions and issues they've had with banks on tracker mortgages, on lending generally and so on. But just what impact, if any, would you have on credit unions, or could you work with them, or would you be taking a lot of their business off them? I don't know. So they're really my points. Thanks, Chairman.
On the last question, I think you dealt with it extensively, but the other two questions then?
Well, I think on the credit unions, the commercial banks, well, I think the impact will be different. For the credit unions, I think we can really support them, strengthen them with our public banking system. For the commercial banks, they probably will feel an increased competition, which is bad for an individual institution, but it's good for society. As simple as that. Asset liability management is the answer to the first question. We have a system in place in Germany where the regions where there's more funding, where there are more deposits, can transfer this inside our system to those Sparkassen who need more funding. So this can be done inside the family, inside transfers of funds. So I think that is quite easy to organize. Of course, the region that is giving funds to other regions, or Sparkasse gives funds to other Sparkassen, they get compensated for that. So there's an internal mechanism that should work quite well. The cost for government, well, this is really the question of how the model will look like at the end of the day, whether there will be a permanent involvement of the central government, whether there will be other providers of capital. What I would like to see very much actually is if some of the capital comes from the region directly. There has to be regional ownership. There has been, well, regional institutions who also provide some capital here. I think it does not make a lot of sense when a decentralized system is only funded centrally. So from a logical point of view, well, a mixture has to be found, but all this is to be discussed in a working group. I think we have some ideas, of course, for Germany, but it has to be an Irish solution. And this can be developed inside a proper working group.
And does anyone on the panel have an idea of the quantum of money that might be required to do what you're aspiring to do?
Well, the initial calculations which we did for a pilot regional bank in the Midlands, it is about 15 to 20 million capital plus startup costs. That's included.
And if you were going to set up 8 or 10 of them, would it be all similar sized? Okay.
Probably.
So,
Yeah, we think so. Yeah.
so you're talking maybe 150 to 200 million.
We think 200 million would be definitely at the outside of it.
And that would be a kind of long-term money invested by the state that they wouldn't get back as such. It'd be.
I think our original prospectus showed that the money would start to return after a break-even period around 3 years. So we do think it'll start coming back.
Okay, all right. Okay, well, thank you all very much and wish you all the best luck with your endeavours. And I think the fact that not only have we some other members here, but we had 2 former cabinet ministers here who were here in their Senate and deputies role at this stage says a lot about the fact that you have got traction. And, you know, I think most people, I think every member has spoken, we want to tease it out further and see how it's going, and we wish you best luck with it.
Senator Burke, yeah.
Very briefly, how is the region defined? Is it defined through the licence, or how do you say this region is belonging to this bank?
Well, we picked the particular Midland region because we had to find out what is, it's really population, 250, 300,000 of a population. You tried to pick a natural-based region. Well, yeah, I suppose the region we picked, it was pretty similar to the old Midland Health Board region, if you like, but that would dictate itself once you had the working group looking at it, because there would be other things in question. For example, the region we picked has no major city of population, but some regions would. So that would decide how you actually set up the region. But that particular one, we just took an arbitrary decision based on a kind of an old Midland Health Board boundary and went with it.
So that wouldn't permit someone from Cavan going down there to
We've nothing against the Cavan
no,
people.
No, but it's up and running,
no, it wouldn't. I mean, you could redesign that region as well. My argument at the earlier stage was, look, if we're setting up, and I think we should do the 8 regions together, then the Midland region that we looked at could well be slightly changed depending on the other regions and the realities surrounding them.
The licence then covers that region.
Yes, that's our, again, the central bank and the regional, the regulatory structure will decide that as well. But as of now, I would say yes. Yeah.
Okay. Senator.
I don't want to delay the meeting.
Okay.
Just to say that I think the credit unions, would be well reassured by what you've had to say, and I'd go as far to say, without putting words in your mouth, this represents a real opportunity for them, because they are cash rich, they have an organisation, they have a skill set, and they're a natural partner in terms of your main branch and having the branches around it.
Thank you very much, Senator. Thank you, each and every one of you, for coming along and for your contribution, particularly our guests from Germany. And I wish you well, and we will certainly put pressure on from our end to ensure that we have that report and debate it and move on the agenda. So with that, I am adjourning the meeting now until Thursday the 19th of October, 9:30.